Get started. Thank you so much for joining us. We got a good group here. I'm excited to go over this with everybody. Real quick before we get started, my name is Senate Eskridge. I am a real estate investor and I help other people invest in real estate. I am also an active real estate coach. I've helped over 100 students get their first apartment deal and helped people with single family as well. My experience in multifamily, I've got 847 units is the current number today, spread out all over the country, Idaho, Oklahoma, Texas, North Carolina, and Ohio. Before I started doing apartments, I did single family for a decade, started in 2009, just after the crash, and built a portfolio up for 10 years in that space, and then moved into commercial real estate, apartments specifically. I've also done some build to rent developments, and I'm an active syndicator. Like I said, I help people just like you invest in apartments. And to do that, some deals require you to be an accredited investor, which is what we're going to talk about today. How to qualify, what it takes, what the hoops you have to jump through, those types of things. But before we do that, we should probably talk about, what is a syndication, and what is it that you're looking to put money into? So the easiest way to explain a private equity or a limited partner investing is we take some kind of an entity. Now we can do this with multifamily, we can do this with development, self-storage, oil and gas, or business startups. I actually just did a syndication for a trash company. It was a metal recycling and garbage company in Texas. So really, we can syndicate anything. All that really means is we take an entity with professional management, and we allow investors just like you to come in and invest into these entities. And then the professionals run the project, and you get to sit back and collect all of the benefits of owning one of these projects without any of the work. So you truly can become what they call a passive investor. And that's why I put this picture on here, this person sitting back, relaxing, and getting passive income while somebody else deals with the headaches. And you get to still take advantage of the high returns. I put on here a very broad range, 15 to 25% internal rate of return. All that really simply means is that you put money in and it returns money over time. That return can be broken up over cash on cash return, actual money that comes to you every month or every quarter. You can get money based on refinances and also on the sale, on the exit. I did a webinar just recently talking about how those returns are broken down. And next month, I'm going to do one on how to retire in 10 years by investing in these types of entities. And when we do that, we'll go over those returns in a lot greater detail. There's also really good tax advantages for these types of opportunities. The depreciation on these are really, really good. You essentially can buy a tax write-off while investing into one of these opportunities. I've got one I'm working on right now. You put $100,000 in, and you're going to get 55% tax deduction in year one that you can use towards any other kind of passive income. I'll do another webinar in a future date, really breaking that down on how that works in specifics. But that's the basics of what you can do and what we're really looking to accomplish here. But as it says here down in the bottom of this slide, several of these opportunities require to be an accredited investor. Well, what is an accredited investor, right? That's really why you guys are here. So I copied this section. You can see it's kind of ugly. I literally went to the SEC's website, the Security Exchange Commission, and copied this so it would be verbatim exactly what they say. You can read it, but really there's two ways that most people qualify as an accredited investor. The first is net worth, actual things that you have that are of value that you can put on a balance sheet. Now, you can put anything you want on your balance sheet. It could be cash, it could be stocks, it could be cars, It could be an art collection or a wine collection or a cigar collection or businesses that you operate. Any of those things that have value, you can put on there. The only thing you can't put on the balance sheet for this example is your primary residence, the house you live in. Now, you can put on rental houses, you can put on a second home, you can put on vacation homes, any of those type of things, but your primary resident is excluded. And as long as that total comes up to $1 million or more, then you can qualify. The other option is with income. Now, lots of people qualify with this income. It's $200,000 or more as an individual, or $300,000 or more if you're investing with your spouse. And that's has to have been for the last 2 years, and you have to expect to do that going forward. Now, let's talk a little bit about that income. If you're investing as an individual, just you, then it's $200,000, right? So if you've got a high income earning job, I don't know what it would be, doctor, attorney, dentist, whatever it would be that earns $200,000 or more, you can now qualify as that accredited investor. If you want to bring your spouse in, then you guys have to combine have $300,000 or more. So it could be one spouse makes 150. If both spouses make 150, it could be one spouse makes 200, the other makes 100. It could be one spouse makes 250, the other one makes 50. It really doesn't matter. Now, if you don't meet that 300,000, you can always invest as an individual. There's also ways that you can qualify without those kind of income requirements. If you get a securities license and you become an active securities investment advisor with a Series 7, 65, or 82, then you automatically qualify because it proves your financial acumen. So that doesn't mean you have to actually be taking on clients. There's lots of financial brokerages where you can hang your license and just have it be there for the qualification status. Those tests aren't easy though. I wouldn't recommend that way unless you absolutely need to. Definitely the net worth and or income is a lot easier. And what I've seen lately is most people are qualifying under net worth. So the other thing that I get asked is, what if I'm investing as an LLC or a trust or any other kind of entity? The answer is real simple. As an entity, you have two ways that you qualify. So the first one is every single person that is a member of that entity. So if you're an LLC and you're the sole member, you as the individual can qualify as an accredited investor. And then your entity automatically qualifies. But if you've got more than one member, if you're investing with a business partner or a spouse or a family entity, brother, sister, parents, any of those type of things, every single member of that entity has to qualify as an accredited investor, unless the entity as a whole has more than $5 million worth of assets. So if you've got $5 million you can pull together into that entity, it automatically qualifies. Now, whether that's single family houses, again, or artwork or whatever it is that can qualify as assets for that entity, then you automatically qualify. Well, the next question is, how do you prove it, right? Because that's what's really important. You can be an accredited investor, but you have to prove it. If you're investing into a 506c offering that requires you to be an accredited investor, then the person's putting up a syndication, someone like myself, has to have proof that you're an accredited investor. Well, there's two ways to go about this. The first is you can get a letter from a financial professional. So that would be a CPA, an attorney, or a licensed financial advisor. And this letter can either come from their letterhead, and it can just simply state, I have verified so-and-so is an accredited investor as of this date. Or your syndicator, someone like myself, has a form letter that they can send to you. And then your financial professional just has to check a couple of boxes that says that you qualify, and then they put the date on it and sign it. It's real simple. Those letters are good for 90 days from the date that they're dated. And you do have to update it every single 90 days, every time you invest with a new investor, new syndication. They are good for a lot longer. If you give me a letter, then that's good for a longer period, because you've already provided proof to me that you're an accredited investor. The other way, there's a couple of third-party companies out there that can prove that for you. I work with one called Accredited, ACCRED. There's another one that's really popular called Parallel Markets. And what you do is you pay these people a small fee, and then they will verify all that accreditation for you. And you upload some documents to prove it, and it's all secure. Their websites are very secure, very safe. And then they issue that same letter to you. And then you provide that letter to someone like myself to be able to invest into their opportunities. Pretty easy process. There's just a couple of hoops you got to jump through to prove it. But why? Why does this matter? And why do we care? So the SEC's job, and I'm not going to read this to you. This is right from the SEC's website, but basically their job is to protect investors and to provide opportunities for investors to invest. So what they want to do is they want to prove that you have the financial sophistication, the knowledge that it takes to be able to understand these types of investments, and that you can handle the risks. And so currently they're doing that based on, how much money you have and what your net worth is. They believe that if you're a millionaire, then you have the financial acumen to understand it. But more importantly, if you take a small loss or that things don't go quite properly, that you can sustain those losses. They're really there to protect you. That's the real goal behind it. So we go back here to this requirement that we looked at. Let me go back a slide. Their job is to prove that you have this ability, or require that you have this ability to sustain that. And they do that by requiring those letters. Pretty simple. But this rule has been in place. These numbers have been in place for a very long time. I believe it was 1987 is when these numbers were established. Obviously, the market's a lot different today than it was in 1987. So you guys, there's more than likely some changes coming to this in the near future. And that's something else I really want to talk about. So there's two big changes that are on the horizon. The first one is the Dodd-Frank Act that came out several years ago requires the SEC to review the qualifications for an accredited investor every 4 years. Now, that doesn't mean that they have to change it. It just means that they have to take a look at it and say that they're still good, basically. And so they've had a committee that's been in charge of this for several years. And every 4 years, they've looked at it and they've said, yeah, no big deal. Everything is fine. We're not going to make a change. Well, this last year, they said the committee came back and made a recommendation to the SEC to make a potential adjustment tied to inflation. Now, I want to preface that word potential. This has not been finalized yet, but they're recommending that the $1 million net worth and the income of $200,000, $300,000 get tied to inflation. So that could mean a lot of things, friends. It could mean that starting next year, they start increasing it based on the consumer price index, the CPI. Let's just say that the inflation is 5%. So now you'd have, instead of $1 million, you'd have to have $1,050,000, right? I did that math in my head, so hopefully it's right. And $200,000 worth of income, that turns into $210,000 based on a 5% inflation. Or what most of the people are expecting is that they would go back to the 1987 timeframe. I believe that's the right year, 1987 timeframe, and base that on inflation from then. And if they do that, then the new net worth requirement would be somewhere around $3 million. And the income would be 600,000 for a individual or 900,000 for a married couple. Now, you guys, this is all speculation. We don't know if the SEC is going to make that adjustment, or if they do, what it will be, what it will actually end up being. I just wanted to make sure that you guys know, since we're talking about this, that that change may come, and that these numbers I talked to you about earlier may be adjusted. Now, I'm sure that's spurring questions. I've seen a couple of them come up. I'm going to save that question till the end, just so we can talk about them all succinctly. I'm actually going to answer it in a couple of minutes. So, but we'll circle back to the questions. But be sure and drop any questions you have in the Q&A section, and I will try to answer them live or get to them at the end. The other thing that is coming, there's a bill that has passed the House with flying colors. It passed very quickly, and it's currently stuck in the Senate, in a Senate committee, to talk about creating an exam. So this exam, what it would do is allow anyone, regardless of their income or financial standing, to go and take a test through a qualified agency to prove that you have the financial understanding, and you can now become an accredited investor, qualifying based on your knowledge. Now, I want to make a big recommendation. This is not a political webinar. I didn't bring you guys on here to talk politics. But if this is important to you, either one of these situations are important to you, I strongly recommend that you write your senator and ask them to support the Equal Opportunities for All Investors Act, and get it out of committee and get that out there so that anybody can qualify as an accredited investor. I personally believe that people are smart, people are educated, and everyone should have that opportunity. And that's the way it's going to happen. So the next thing that people should ask is, well, what happens if you don't qualify? You just don't get to participate in these. No, that's not the case. There are other opportunities. So if you don't qualify as an accredited investor, then you can invest in what's called a 506B syndication. And I want to take just a second, and I want to pause and explain the differences here for you guys. So there's two different types of syndications that people use on a regular basis. And what these are exemptions from requiring you to become a publicly listed stock. Like Tesla, you can go get a share of Tesla through any brokerage firm and pay a very small commission. But it's very expensive to go public, and it's very expensive to create an investment that is public for anybody to be able to use. So syndicators like myself, we rely on two different exemptions to that rule most of the time. The first one is 506C. So I'm sorry, it's called Reg D, Regulation D 506C. The other one is called Regulation D 506B. 506C means that you can publicly advertise. Literally, I could go take out a billboard. I can run an ad on Facebook. I can put an ad in the newspaper and say, I've got this great opportunity to come invest with me. But when I do that, you have to be an accredited investor to be able to come into that. The other one is a 506B, as in boy. Now, this is what they call a private investment or a private offering. The reason they call it private is because you cannot generally solicit. That's the rule. That's the difference. You cannot take out an ad. You cannot advertise. You can't put it out on Facebook for the entire world to see. And the way that you can see them, the way you know about them, is by networking with sponsors and getting to know people like myself who do these types of things. There's lots of ways that you can grow your list of people that you have relationships with. You can go to conferences, you can get on networking meetings, you can come to webinars like this. You can also apply to get on people's private investor list. right? So my link is right there on the bottom, www.senateskridge.com/invest. And when you go to that link and you fill out that form, you have the opportunity to schedule a 15-minute meeting with me, where we really set up the conversation and we get to know each other, and we talk about, your experience, my experience, your financial background, those type of things, so that we can start building a relationship. And then when I have a 506B offering that I can't generally solicit or advertise, I can share it with you because we've built what they call a substantive relationship. So don't fret. If you don't qualify as an accredited investor, it's totally okay. I want to go back. There's a question here, and I don't know if it came in before or after I went over it, but I'm going to go back and just bring up the slide with the current rules one more time. So I'm going to go back a couple. So again, the current rules to qualify as an accredited investor, it's this right here, net worth of $1 million or more, excluding your primary residence. But again, that can include anything that you own that's of value. Your art collection, your comic book collection, your wine collection, the furniture in your house, your cars, your vacation homes, your rental properties, your stock portfolio, your retirement portfolio, the cash value in your life insurance. Anything that is of value that you can put on a financial statement will help you qualify for that $1 million worth of net worth, as long as you're not including your house. The next one is $200,000 or more in annual income for the last 2 years, with the expectation you're going to continue that as an individual. $300,000 or more if you are investing as a partner, a spouse, or you have to have your securities license. If you're investing as an entity, all the members of the entity have to qualify as a accredited investor, or the entity has to have $5 million or more of assets. Pretty easy to qualify. So moving on back to where we were, 506C versus 506B. All right, let's jump into questions and answers here. Where do I get the letter that you spoke of? Oh, pretty easy. If you need a copy of that form letter I mentioned, all you need to do is email me. My email address is right here, senate@senateskridge.com. I'll be happy to provide you a copy of that form letter. And then you take that form letter, as I mentioned, to a financial professional, a CPA, an attorney, a financial advisor. They fill it out, send it back to me, and you're good to go. They're good for 90 days from the date they're signed. Can you tell me the webs? Oh, yeah. So the websites that I mentioned, I mentioned two. There's more than these two. These are just the ones that I've worked with. There's one called Accred, ACCRED, accred.com. The other one is Parallel Markets. I'm not sure what their website is, probably just parallelmarkets.com, but if you Google Parallel Markets Accredited Investor, it'll come up. But there's 3 or 4 other ones that you can use. There's lots of them out there. I would just double check and make sure that it's a secure website and it's not horribly expensive. Should be about $50 to qualify or to prove your accreditation. See, next question. If I'm investing as an IRA, does the IRA need to okay. So the question is, if you're investing as an IRA, does the IRA need to qualify as an accredited investor? And the answer to that is no. So you, as the individual that owns the IRA, qualifies as an accredited investor, and then your self-directed IRA can invest in a 506C. It does not have to qualify on its own. I do know that some people have been confused by that because sometimes the IRAs are inside of an LLC or inside of an entity. But no, if you are an accredited investor, your IRA is automatically qualified as an accredited investor. And I do plan on doing a webinar in the future about self-directed IRAs. They're a very, very powerful tool. If you don't know that you can invest your retirement funds into private placements, into these kind of real estate investments, there's a lot of good opportunities. I'd love to set up 15 minutes with you and talk with you about how to do that. You can again do that with my link here, senateskridge.com/invest, and we'll go through that. Next question is about a trust. Okay, so it's if I have a trust, how does my trust qualify? Guys, there's a lot of rules about trusts. So first of all, if it's in, there's basically two different kinds of trusts. One is called a revocable trust, and then there's one that's called an irrevocable trust. Okay. So if it's a revocable trust and you are the trustee, then you automatically, your accreditation status makes the trust accredited. So if it's a living trust, if you're using it just for investments and all of that kind of stuff, then your qualification automatically qualifies your trust. Now, the other way to set it up, if it's more of like an asset protection trust, and that trust, basically the way to decide this is if the trust files its own tax return. If the trust is its own entity and you are no longer in control of that trust, then the trust itself has to have that $5 million in assets to qualify as an accredited investor. There's lots of ways around it. I would definitely entertain the conversation with you. If you have a trust, let's set up a meeting. Let's talk through how it can qualify. We can always get the attorneys involved and just double check and make sure that there's a way to do it. There are also other ways around it. I have seen people, I've not ever done this myself, but I've seen people where the trust basically like does a loan or something back to the individual, and then the individual invests. There's lots of ways around it. But let's definitely have that conversation. All right, next question. Oh, that's interesting. Okay, so the question is, if I am an accredited investor and my children who live with me want to invest, can they qualify? You know, that's a real gray area. I have done that before, and my attorney signed off on it. Basically, if your minor children live in your house and you're investing for them, you know, can they qualify? Or as long as you're in the same household. So again, in the past, I've done that. I've done it twice, two different times before. And I had my attorney actually bless that investment before we went through. And my attorney reviewed the individual situation. So I would say that I would say yes, but we need to get it approved and qualified first. Because you guys, there's lots of ways around the rules. If you know how to play the game, there's ways to get in there. But these rules are there to protect you, right? So we want to make sure that we are following not only the letter of the law, but also the spirit of the law for several reasons, right? The biggest one is they're here to protect you. Second one is I don't look good in orange, right? And I'm not going to go do anything that would tarnish my reputation or allow me to get in any kind of trouble in any way. So that one, let's get the blessing of the attorney. And so we have a couple more questions here. If you guys have any questions at all, please drop them in the Q&A and I will answer them. I have 30 more minutes blocked out here, but we're going to end early at this point, it looks like, because we've answered most of these questions so far. So the next question is, if I've invested with you before, do I have to qualify again? Okay, so it depends. Those letters, as I mentioned, they're good for 90 days. And so if once I get the letter, you can invest as many times as you want within 90 days. But also once I have I have personally approved you to invest into one of my investments, I can now use that same approval for up to 12 months, up to a year. So as long as you're investing with me in one of my syndications and I have verified that you are accredited, I can use that for up to 12 months. And the same thing with anybody else. Now, there are times when I will work with other people on other deals. And even though I've approved you, I may have to get a new letter if I'm working with another partner that's the lead syndicator or the lead general partner on a deal. So know that I may ask for a new letter if you've given me one. There is that possibility down the road. So yeah. If my spouse is accredited, am I accredited? No. So remember the qualifications to become an accredited investor as an individual, then based on income, it's $200,000 or more in income. But to invest as a partner, as a spouse, as a joint investment, then you have to have $300,000 or more. So an individual can qualify or a couple can qualify together, but just because one person qualifies doesn't automatically make the other. Reading into that question a little more, I'm making some assumptions here. If one spouse has net worth equal to or more than $1 million, and you're not in like a community property state, I could see that possibility where that spouse has $1 million worth of net worth, but the other spouse doesn't. So I think most of the time, though, that you would qualify based on net worth if you're married, as long as you can show that the assets are jointly owned for some reason. Either that, like I'm in Idaho, it's where I live. And so my wife, who's hugging me here in this picture, my net worth is over $1 million. Well, so is hers, right? Because our net worths are combined. And so you'd have to check with the rules on your individual state. How can I learn more? Okay, the question is, how can I learn more about investing with you and your opportunities? So again, go to that website, senateskridge.com/invest. You sign up there and you'll be added to my private investor list, and I will email you the deals that I do. I do have a current deal right now that I'm working on in Jerome, Idaho. It's a brand new build, 28 units. It is an accredited investment, 506C, but I do B investments all the time. So we need to build that substantive relationship before you can invest in a B into my future deals. Okay. The last question on here is, so the last question is, will this webinar be recorded? I have somebody I want to show it to. Yeah, absolutely. Every single person who registered for this will get a copy of the recording. I'm not going to publish the recording out there to everybody, but anybody who registered for this will get a copy of it. So those of you that are here, you'll get an email from me probably later this evening with a copy of the recording. So, okay, everybody, that wraps it up. Those are all the questions I have. I'll give you one more call for any more questions. Oh, yep, there's a question. Somebody that it's reminding me to talk about the slide. You guys, how to get a hold of me, right? So I'm pretty easy to find. My website's right here, senateskridge.com. My email address, feel free to email me anytime, senate@senateskridge.com. I'm also active on social media. I've got a Facebook page. It's probably the best one to get a hold of me on. Also active on LinkedIn. I'm the only Senate Eskridge you'll find. And again, to apply to invest with me, senateskridge.com. All right, everybody. Next month, I'm going to be talking about how to retire in 10 years by investing in private placements. So be sure and watch out for my emails and get signed up for that for next month. Thanks, everybody. I really appreciate you joining me. Let me know if you have any questions. Talk to you next month.